Welcome to Tech Monetize Official. If you've ever felt overwhelmed by investing or thought that building wealth was only for the elite, you're in the right place. Today, we're cutting through the noise and getting straight to the truth. Today, I'm revealing a financial truth Wall Street hopes you never discover. For decades, the financial industry has thrived on making things seem complicated, convincing everyday people that only experts can succeed. Wall Street's biggest secret? You don't need their genius or their high-fee advice to build wealth. In fact, the system is designed to make you think you need them, but the reality is much simpler. The truth is, there's a simple, powerful way to invest that anyone can use, no matter your starting amount or experience. You don't need a finance degree or a Wall Street connection. All you need is the right information and a willingness to take action. You don't need to watch the market all day or decode financial jargon. Forget about chasing hot stocks or timing the market. Those are distractions that often lead to disappointment. This method is championed by legends like Warren Buffett as the best way for most people to build wealth. Even the world's most successful investors agree. Simple, consistent investing beats complicated strategies over time. It's called the index fund. Straightforward, low cost, and accessible. Index funds let you own a piece of hundreds, even thousands of companies at once, spreading your risk and maximizing your potential for growth. By the end of this video, you'll understand why index funds are the most effective wealth-building tool ever created. You'll see how ordinary people are using them to achieve extraordinary results, and how you can too. We'll break down what they are, how they work, and the secrets even pros overlook. You'll learn the step-by-step process to get started, and how to avoid common mistakes that trip up new investors. Get ready to take control of your financial future. No more confusion, no more intimidation. It's time to empower yourself with knowledge and confidence. Grab a notebook and let's get started. Take notes, ask questions, and be ready to take action. Your future self will thank you. This could be the conversation that changes your financial life. Let's unlock the secret together and start your journey to financial freedom right now. Let's cut through the noise. Investing can seem overwhelming, with endless choices and complicated jargon. But what if there was a simple way to invest in the world's biggest companies all at once? So what exactly is an index fund? And why do so many investors swear by it? Imagine a basket that holds hundreds, sometimes even thousands of top companies. Big names you know and many you don't. Apple, Microsoft, Amazon, Google, all together, working for you in a single investment. Instead of trying to pick the next big winner, you own a slice of them all through an S&P 500 index fund, which tracks the performance of America's 500 largest companies. If one company stumbles, you've got hundreds more backing you up, spreading out your risk and smoothing the ride. Index funds offer three key benefits: simplicity, diversification, and low cost. They're easy to understand, give you broad exposure, and keep more money in your pocket. No need for endless research, stock picking, or trying to time the market. Just pick your basket and let it grow. Want to invest in US giants? Choose an S&P 500 fund. Want to go global? International index funds let you own companies from all over the world, expanding your reach. Want everything in one go? Total market funds cover nearly every publicly traded company, giving you the broadest diversification possible. This approach removes emotion and guesswork. No more panic selling or chasing the latest hype. You can invest with confidence and peace of mind. With index funds, you ride the market's long-term growth, not its short-term swings. Over time, markets tend to rise, rewarding patient investors. It's a proven, disciplined strategy that rewards patience and consistency, helping your money grow steadily. You're not searching for a needle in a haystack. You own the whole haystack, increasing your chances of success. That's a game you can win, and it's one that's open to everyone. Next, let's see why costs matter so much when it comes to investing, and how index funds help you keep more of your returns. Let's talk about fees, the silent killer of your wealth. Most people don't realize just how much they're paying or how quietly these costs chip away at your future. Fees are often buried in the fine print, and they can be easy to overlook, but their impact is anything but small. Actively managed funds often charge 1% or more in fees. That might not sound like much, but it adds up fast, especially when you consider that these fees are taken out every single year, regardless of how your investments perform. On $100,000, a 1.5% fee is $1,500 a year, whether you make money or not. Imagine paying that year after year, even in years when your investments lose value. Over time, that's a huge chunk of your savings gone. Index funds? Their fees can be as low as 0.04%, just $40 a year on the same amount. That's a fraction of what you'd pay for an actively managed fund, and it means more of your money stays invested and working for you. That's a difference of $1,460 every year staying in your pocket. Over a decade, that's $14,600. Money you could use for your goals, not someone else's. But beware, not all index funds are cheap. Some charge 0.5% or more, which can quietly erode your returns. Don't fall for a fund just because it's called an index fund. Always check the details. Always check the expense ratio before you invest. It's one of the most important numbers you'll see, and it's your best tool for protecting your money from unnecessary costs. Over decades, even a 1% difference in fees can cost you hundreds of thousands in lost growth. Compounding works both ways. Fees compound against you, shrinking your nest egg year after year. Low-cost index funds are your best defense. Don't let high fees eat your future. Protect your investments by choosing funds with the lowest possible costs. Read the label, demand the lowest cost, and keep more of your money working for you. Every dollar you save on fees is a dollar that can grow for your future. Fees are the cancer. Low-cost index funds are the cure. Don't let your hard-earned money be eaten away by hidden costs. Now, let's talk about beating the market, or not. Because understanding fees is just the first step to smarter investing. Here's the truth Wall Street doesn't want you to know. The real secret isn't about picking the next hot stock. It's about keeping more of what you earn. Wall Street wants you to believe you need their expertise to beat the market. But the facts are clear. Most pros fail to outperform simple index funds over time. You pay high fees for underperformance. Why? With index funds, you get the market's return, minus a tiny fee. You won't dramatically outperform, but you also won't lag behind. You become the market. Your results mirror the economy's biggest companies. This removes the risk of hiring the wrong genius manager. It's about humility, accepting that even experts rarely outsmart the market long term. Average is awesome in investing because average beats most experts. Stay disciplined, buy the market, and hold on. Let's clear up a myth about how index funds are managed. Some think index funds are unmanaged, just money floating in cyberspace. Not true. Index funds are managed by algorithms, disciplined, emotionless robots. Their job? Mirror the index exactly, making changes only when the index does. No guessing, no ego, no panic selling in a crash. This robotic precision keeps costs low and removes human error. A fund manager oversees the process, ensuring everything runs smoothly. You're paying for efficiency, not expensive star managers. That's why fees are so low. Embrace the robot. It's designed to keep more money in your account. Now let's talk about a risk most people overlook: concentration. Are you really diversified? Index funds offer diversification, but there's a catch. Most, like the S&P 500, are weighted by company size, so giants like Apple and Microsoft dominate. Today, a handful of tech companies make up over 25% of the S&P 500. If those giants stumble, your fund feels it. This is called concentration risk. You're not as evenly diversified as you think. Don't panic, but be aware. Consider adding small cap or international index funds for broader diversification. Some prefer equal weight funds where every company gets the same slice. The key: know what you own and understand the risks. Your S&P 500 fund is great, but it's tilted toward big tech right now. Let's see why, despite these risks, experts still recommend index funds. With all these truths, fees, concentration, just average returns, why do experts still love index funds? Because they solve the two biggest problems: high fees and emotional mistakes. Low costs mean more money for you, not managers. Index investing gives you a simple plan: buy, hold, and ignore the noise. No more panic selling or chasing hot stocks. Over decades, this discipline and low cost make the biggest difference in your wealth. Yes, there are risks, but they're manageable. For 99% of people, index funds are the most effective, accessible way to build real wealth. That's why I, and nearly every financial expert, recommend them. Ready to get started? Here's how. Ready to invest? Here's your step-by-step guide. First, open a brokerage account. Vanguard, Fidelity, or Schwab are great choices. It's quick and easy, just like opening a bank account. For most beginners, a Roth IRA is the best place to start. Tax-free growth and withdrawals in retirement. Fund your account. Set up automatic monthly transfers, even $50 or $100. This is called dollar cost averaging, investing regularly no matter what the market's doing. Now, pick your fund. A total stock market index fund is a great choice. Look for tickers like VTI, Vanguard, FZROX, Fidelity, or SBUTSX, Schwab. Make sure the expense ratio is under 0.10%. Set your money to invest automatically and let it grow. Don't overthink it. Consistency beats perfection. You're now an investor. That's all it takes. Index funds aren't magic, but they're the most reliable way for most people to build wealth. They offer simplicity, low cost, and broad diversification. No finance degree required. They're not get-rich-quick schemes, but they put the odds in your favor. Your journey to financial freedom starts with small, consistent actions. Ignore the noise, embrace the proven strategy, and let time work for you. Subscribe to Tech. Monetize Official for more straight talk and support. Remember, you are the manager of your money. Own it, control it, and secure your future. Thanks for watching. Now go take action. See you next time.